sentiment around crypto markets and traditional finance diverged dramatically over the last few months. Notably, developments in one sphere failed to impact the other. The world's largest cryptocurrency, Bitcoin, showed increasing decoupling from popular stock indices like S&P 500, the Dow Jones Industrial Average, and the tech-heavy NASDAQ 100 as per on-chain analytics of an anyway over the digit. And then just take a look at the data. Bitcoin's 30-day correlation coefficient with these TradFi levels continued to be negative, and running them and spiritual. Bitcoin continues to demonstrate a negative correlation with traditional financial markets. Among major indices, the Dow Jones Industrial Average shows the most significant negative correlation, registering it beyond detailed insights. Visit into the block on analyzing the recent price trajectories of the entities in question. It was evident that the digital assets and real-world assets were moving on separate wavelengths. The King coin has been sluggish lately, with the price at the time of publication being 0.76%, lower than 3 months ago. The asset was stuck in a narrow trading range between $29,000 and $31,000 after its last meaningful rally in June. Meanwhile, equities have marched higher. Big tech has pumped 15% the same time period, while the S&P 500 and the Dow have risen by 8.26 and 4.13%, respectively. The development holds significance. Notably, for a long time, both Bitcoin and equities were part of the risky asset category. Ryan Grace, head of digital assets at Taste of Crypto, attributed Bitcoin's negative correlation to crypto-specific events like regulatory headwinds. He pointed out that the absence of any immediate catalyst was the pulling traditional investors away from Bitcoin and crypto. Grace added that the excitement and popularity around AI has also contributed to an increased interest in tech stocks vis-a-vis crypto markets. In a nutshell, trends like these are generally cheered by proponents of Bitcoin's safe haven narrative. If the asset stops reacting wildly to every real-world trigger, it could be used as a refuge in times of financial risk, akin to gold. Prominent on-chain analyst Will Clancy took to Twitter to reveal how Bitcoin's volatility relative to gold has been declining steadily over the past few years. At the time of writing, digital gold's volatility is hovering around multi-year lows.